Hi there traders. This video is going to show and explain to you the importance of Chinese economic data and its impact on the Australian dollar. Now the reason there's such a impact on the Australian dollar from Chinese economic data is because of the close proximity and trading relationship between Australia and China. About 30% of Australia's GDP involves exports to China. So a slowdown in the Chinese economy will have a knock-on effect and be a slowdown for the Australian economy. The relationship is very tight. So as a consequence, what's good for China is good for the Australian dollar, and what's bad for China is bad for the Australian dollar. Just wanted to show you how that relationship has played out recently. This is a video done at the end of September, beginning of October 2018, and it just so happens that there is a really good illustration to show this relationship. Over the weekend, while the markets were closed, the Chinese data came out and it showed a slowdown in the manufacturing output from China. Now, at this present moment in time, there's a US-China trade war going on, and for one of the first times, we're starting to see some of that reluctance to place new orders beginning to filtering through now in the Chinese data. So, in a sense, the tariffs which were put into place on the 24th of September are now taking effect. The Chinese economy showing manufacturing slowing down. Obviously less orders are coming in because who wants to place orders if the products are going to be having a 25% tariff on them. So there's a logical slowdown that you would expect from this scenario, and it's happened in the Chinese data. Now I have the Australian US dollar pair open in front of me, and what happened is the market opened here on the 1st of October, and you can see that price sort of rallied up to these moving averages. The 150 moving average found resistance and then sold off from those levels. If you drop down to the intraday charts, we'll see similarly that the market opened here on the 1st of October. Price kind of, did not very much. There's some flows, rallied up to the 200 moving average and then sold off heavily to the downside. Now, that's just by way of illustration that the Australian dollar is closely linked to the Chinese economy. So that's something for you to take away in your trading, something for you to recognize. And if you're struggling to know how to, really use the Chinese data when it comes out, here's one close connection that will help inform you to make better trading decisions.